Hello traders, welcome to the LFB and our global video charting review. This is the technical review for Tuesday, the 26th of April 2011. My name's Mark O'Haig from the LFB Trade Desk. We're going to be providing for you two videos each day. First one's going to be a technical review of the global market, give you a macro minute update on where things are, set you up for the day, and then we're going to give you a fundamental video review which will follow along the lines of the momentum in global market headlines, sentiment, just overall market analysis from a fundamental point of view. We do have to point out that any form of trading does involve substantial risk, and we do ask that you read and accept the disclaimers posted to the LFB website before taking data and information from the video. We're on a 1 hour chart, just looking very near term. The charts that we use have reset support and resistance lines at 1700 East Coast time. So where you can see on these charts a move up on the green support and the red resistance lines, that's the resetting of swap interest at 1700 each day. That's when the new futures and forex day starts. We also provide a trend line just to give us an eyeball. Are we going long or are we going short? And then we have just an arrow to highlight for you the price points that we feel are very important. The video and client note for Monday highlighted silver, which we've got here, and not to be looking to get long the silver market until we've had a pullback. And we had the pullback. We were preaching patience on the video and the client notes yesterday, and patience is still the key. You've got to keep out of this silver market at the moment. We're in a very strong long trend, but near term our candles have changed from blue, which is long momentum, to white, which tells us that we've just got bearish momentum that has hit the market. We've got a short signal, short on silver from 46.50, but we've got to be very much aware that is against the trend, and we would hold fire on anything in regard to silver trade at this point in time. Looking at the gold market, very much the same as silver. Hasn't been as bullish in its overall movement, but still a strong long market. And again, yesterday we highlighted the fact that at 15.10 we really did need a pullback, which we've got, and now we need to practice again patience. We got the short signal that broke 15.05, wasn't issued to clients because it is so far into a long trend. We didn't want to be selling this and then getting caught on a long bounce, because the markets are buying the dips at this point in time on precious metal. So silver and gold both status quo, nothing to be done on them at this point in time. We will signal to clients the moment that either of them gives us a buy signal. We've got West Texas Intermediate, we've got a short signal overnight that hit going short from 112, targeting 111.10. That played out and has finished, but at this point in time we're just waiting again, the same as the oil, gold and silver markets are all combined at this point in time. We're just waiting for West Texas Intermediate just to consolidate a little bit and see whether we're going to get another buy the dip. So on West Texas Intermediate, not an awful lot to be done. Looking at the S&P, we got a signal out to clients this morning to get long from 13.35, targeting 13.37. That one's paid out. We have got a secondary target on that at 13.39, but we do have to be aware that the US markets have got red flag releases out today at 10 o'clock. We've got the conference board. So we're going to be looking at the impact of that. And also, I think the market is casting its eye forward to Wednesday, and Mr. Bernanke, the head of the Federal Reserve, will be giving his first press conference after the interest rate decision. Going to follow the European Central Bank's mandate of having a press conference. That's going to start to impact the outlook and overview for equities and commodities, and to the greater degree Forex as well. So at this point in time, first target's hit on S&P at 1337. You wouldn't want to let this pull back much below 1335 because at this point in time, we've just gone into this flat kind of transitionary period. Strong support's going to be down at the 1320 area. That's the 20-day simple moving average, and we would have thought that the dip will get bought at that point in time. Take a look at the 10-year Treasury note. These charts are an absolute mess. We got a signal to get long the 10-year Treasury note at 120, which has completed its upside target of 120.40. If you're not au fait with Treasury notes, it's a unique market. Two sides to a Treasury note, which is the note value, which we're seeing here at 120.28 on the 10-year Treasury note. As the note value goes up, the interest rate goes down. And it's the 10-year Treasury note that has set interest rates for interbank lending for a long time, although that is starting to change. But very choppy, very overlapping. The interest rate markets are not giving us any reason to think that there's too much potential in the global market at this point in time. Taking a look at the German DAX, playing a little bit of catch up with the S&P. The S&P 500 is already close to yearly highs. German DAX has got 2 or 3% to go as yet before it gets up there. So we're just looking for consolidation at this point in time from the German DAX. We got the long signal at 71.50 on German DAX trade, which has now completed and paid out. We're now looking just for some consolidation of those moves and just to see where the European market wants to take equities as this earnings season unfolds. So as we've got it at the moment, the commodity markets just are pulling back and holding steady, buying the dip. Equity markets are holding the higher ground. Interest rate markets are flat, not a lot going on, and that leaves us the dollar index, which at this point in time is still holding above that 74 area. We do have a short signal forming on the dollar index. That's not going out to clients at this point in time. This 74.00 is just too much of an inflection point. We've got too much noise around here at this point in time to be issuing a signal on the dollar index. We will be looking at the major currency pairs. So we'll be looking at euro dollar, we'll be looking at pound dollar, just to see where they're at. And we can see euro dollar here. We've had 4 signals on the daily chart, too long, too short. Over the course of the last 3 days, we've gone into a sideways chop. Nothing clear about this, but that is expected around the Easter time break because the European markets do literally shut down for the 4-day period over that bank holiday, and it takes a while to get back to normality. Pound, we've only had 1 short signal on cable, which was earlier this week. We're now looking just for some consolidation. Near-term charts, the 30-minute charts, have signaled that there could be a break above 65.15, targeting 65.50. We'll be keeping an eye on that at this point in time, favouring the long side of pound dollar, even though the UK economy doesn't look that strong in regard to being any better or worse than anything else. It's just a play at the moment on the potential movement that you've got in a very weak dollar. Dollar yen just looks very weak, overlapping, choppy, but we are in a short trend again on dollar yen. The long moves didn't last that long, and we would favour the short side of the dollar against the Japanese yen. We would favour some Japanese yen strength over the course of the near term. So really, to sum up, beginning of the week, we're still got a very cloudy picture as to where the global markets are looking to go, and therefore these Forex markets are going to struggle to keep up. Signals, alerts, market updates, trade plans will all get sent through to clients as this unfolds. You don't have to sit there looking at your charts all day long. We will do the heavy lifting for you, and we will signal off the trade desk when market momentum hits for you.